This weekend, tensions in the Middle East escalated sharply. U.S. and Israeli strikes on Iran triggered immediate airspace closures across the region. Major hubs like Dubai, the busiest international airport in the world, saw hundreds of flights canceled. Air Canada suspended flights to Dubai and Tel Aviv. Toronto Pearson confirmed delays and route adjustments. On the surface, this looks like a travel disruption story. But in financial markets, this is something else. It's a risk repricing event. When airspace shuts down across the Gulf region, investors don't just think about stranded travelers. They think about oil supply, shipping lanes, insurance costs, and the possibility of escalation. Even if energy infrastructure hasn't been directly hit, the market moves on probability, not certainty. And probability right now points to higher risk. If tensions persist, oil prices could climb. For Canada, that creates a complicated picture. In the short term, higher oil prices benefit Canadian energy producers. Alberta's oil sands become more profitable. The TSX, which had significant energy exposure, could see relative strength compared to other global indexes. But higher oil doesn't just mean stronger energy stocks. It also means higher fuel costs. And higher fuel costs ripple through the economy, transportation, food prices, logistics. If oil stays elevated, inflation pressures could reappear just as central banks are carefully navigating interest rate decisions. That matters because the Bank of Canada is watching inflation closely. A sustained energy spike could complicate the path toward rate cuts. At the same time, airlines and travel companies face rising costs, longer routes, higher insurance premiums, operational uncertainty. That introduces volatility in aviation and tourism sectors. And when global uncertainty rises, capital behaves predictably. The US dollar typically strengthens. Gold often moves higher. Defensive sectors gain attention. Emerging markets tend to wobble. For Canada, the bigger long-term story is this. In moments of geopolitical tension, stable democracies with reliable energy exports become strategically important. Canada doesn't just sell oil, it sells predictability. And in uncertain times, predictability becomes a premium asset. This is why geopolitical events abroad quickly become economic stories at home. Markets are not reacting emotionally, they're recalculating risk. And right now, risk just got more expensive. For weekly analysis that connects global headlines to capital flows and economic reality, this is the Financial Compass.